Hello everyone, very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In our today's session of correlation and regression, we will be taking a look on the market developments in aftermath of US CPI release, which has caused a spike in many major forex currency crosses, including the US dollar. So in light of these developments, we will have to see how things stand and how these things are likely to evolve further as the North American trading session is going to get underway very soon. And along with the forex market, as is the customary practice, we will also be considering the play in US equity indices in particular, and also to help us guide through the developments so far, we will be taking a glance on the European equity indices as well. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. So this is how the EURUSD has reacted to, with the spike of 100 pips from the lowest point to the highest point. This move just prior to the release of CPI was kind of surprising, and it can be, as the rumor mill suggests, can be attributed to some sort of leak, but you are not likely to be in position to take advantage of that because we are all awaiting the CPI release at the official time, so we can't really anticipate this kind of move in prior time. Now that we have this development in side, and as I had talked about the possibility of Euro USD going towards 1.08 to 3 days back, we have seen the trajectory of the Euro USD for the last couple of days, where it has continued to consolidate with the undertone being quite bullish. So that has served us well so far, and as we have this sharp spike in place, it makes our job difficult to look for the fresh entries. As we have seen this big move, it is not really advisable to go for a long trade, and nor it is advisable to go for a short trade at the moment, as if we go for with the trade, then that entails significant amount of risk, and if we go against the trade after the release, which has cause this massive spike, that is also not advisable, and it is more like catching a falling knife. So we will have to adopt a wait and watch approach here, and as the range has been enlarged, all we can do is try to capitalize on this expanded range in coming hours. That is the thing which I feel is going to carry the optimum risk reward ratio, but that is going to call for a significant amount of patience on our part, as we will have to sit on the sidelines till we have better opportunities to get involved in the market. Now, in this development, we have this fresh break above 1.08, and the undertone is still bullish. And if we look at the price developments, there is a significant price move after this prior up move caused by the non-farm payroll release. We have this again new spike caused by the US CPI, and if we don't really see these gains evaporating in next couple of hours, then I think we are again in line for expecting the Euro USD to continue to rise, and with these move we can count this 1.073 as the immediate swing low. So as long as the price moves hold above this level, we will have to adopt a buy on dip strategy here in the euro. And as I said in my introductory remark, right now is not the moment to get involved, but of course we will have the opportunities coming in our way if we are patient enough to deal with this development. Now let's consider the development in light of the relative strength and weaknesses for the major currencies trading against the dollar. Even prior to the release, we had the dollar trading on the downside in today's session. Earlier in the day, it was rising against most major currencies, but then after initial hours of the European trading session, we saw this reversal, and then this spike came in. Now, if we look at the chart in a comparative term, you can see that for the euro, just like the case with last couple of sessions, today also, it was relatively on the stronger footing. And if you compare the timeline of this swing high and swing low formation, it puts it ahead of the AUD for sure. So, in relative terms, we have the Euro USD with better bullish momentum compared to the AUD simply by looking at the timeline of this high and low formation. Now let's see what's the story for GBP USD. In today's session, the GBP was also trading with bullish bias, and it went on to make this fresh 4-hourly highs at 12:50 GMT. Let's see what was Euro USD doing at that point in time. The Euro USD didn't really make a fresh 4-hourly high after this 7:15 GMT swing high, and prior to the release it was also getting close to the immediate swing high. Now if we compare that with the price trajectory of the GBP, GBP has this prior surge, but then the euro has late surge, so it is more or less neutralizing the price moves. And if we look at the larger time frame charting, the euro is apparently on a better footing for further rise. So in today's session also, just like last couple of sessions, we have to give the first preference for any buy on dips trade to the euro ahead of the GBP and also ahead of the AUD. GBP looks better placed compared to the AUD, but that's about it. We have euro as the first choice in all these three currencies. Let's consider another currency, NZD. For NZD, the sharp move on the downside was significant in terms of the magnitude. If we look at the decline observed in other major currencies, it was not that significant, not much lower compared to the prior swing lows. So that puts NZD as the weakest of all the major currencies which we have seen so far. And if we look at its range for last 2 and 4 hours, therein also it had not really made a fresh swing high until this release came in. So that puts it in the position of last place of all the major currencies. And this is a currency where you can keep an eye on possible reversal in the momentum, strong bullish momentum in NZD. This is not to go with the trend. This is the currency instrument which you can go for against the trend, going for against the trend. Before we can be so sure about the NZD, we always have to consider all the major currencies, and let's see where the CAD stands. CAD is apparently better placed than the NZD, but for charts on the 5-minute time frame, the range with 2 hours and 4 hours, it was trading with bullish bias even prior to the release. So in today's session, it is one of the strongest against the dollar. And if we look at the timeline of the CAD's high and low formation, this swing high came in at 10:20 GMT. After that, it continued to make these lower lows, which puts it ahead of the euro in intraday terms. So the CAD is apparently better position for the continuation of the momentum against the dollar, and its decline is also quite significant from this high to the low. So we will have to place the CAD ahead of the euro in today's session at least. Yesterday it was trading behind the euro, but now looking at its price formation even prior to the release, we will have to place it ahead of euro in intraday terms. On the larger time frame, it is still lagging compared to the euro, but in intraday it is on the stronger footing. Let's see the development in USDCHF. CHF seems to be lagging in today's session as well, and even in the current scenario, it has given up its gains in aftermath of CPI release, and it is almost halfway through to this prior move from 0.936 to 0.9265. So this is now the middle level for the USD and that one of puts it as the one of the weakest currency instrument trading against the dollar. We had NZD bearing the flag. Let's see if we can put CHF as the weaker of the two. Yes, and it seems so. So we have the USDCHF with the least bullish momentum against the dollar. For last couple of days also, it has continued to trade with this formation of higher highs and higher lows. In today's session also, even prior to the release, it was not that strong against the dollar. So we have the CHF as the clear laggard, and CAD, or now it is matter of preference, CAD or Euro with the best bullish momentum against the dollar. And before we can say best, we always have to consider the JPY. JPY in today's session has also appreciated significantly. If we look at the high and low, it has appreciated more than 1 percentage point. At one point in time, the appreciation was fairly close to the 2 percentage point in total move, starting this level of around 132.5 and declining 300 pips to 129.5. So that puts JPY as the strongest of the pack in today's session against the dollar, sheerly looking at its magnitude. And even if we look at the timeline of this swing high and swing low formation, the JPY stands as the clear winner. So for continuation of the trade, we will have to put the JPY ahead of the euro and even ahead of the CAD, simply looking at its magnitude, and along with that, the timeline is also helping us with these assessments. So we will have to go with the flow, and in that scenario, we have the JPY as the currency instrument to trade with, and I would say that try to exploit this range for next couple of hours. So unless and until this range stands broken, we have to take our chances while we can try to short sell the USDJPY anywhere closer to this upper range, while expecting the USDJPY to continue to trade with this bearish bias. And same thing can be said about the euro and the CAD as well. But in terms of the reversal, we have the USDCHF as the best placed instrument. So if we see the CHF climbing past this prior release in coming hours, then I think we will have to change the trajectory, see how things are evolving, and then start looking for the buy trades in the USDCHF. So we have these two differing options in terms of our trade placement, and we will have to allow for some more time, allow for further developments in the market, and then we can go for the clear-cut trading setups with these two contrasting options. Now let's turn our gaze to the equity side. For the equity, the momentum has been bullish, and same story is there in today's session also. We had this sharp move in Dow Jones Industrial Average with gains of more than 1 percentage point in aftermath of US CPI release. And if we look at the yesterday's developments, as I had talked about, the possibility of the Dow Jones Industrial Average continuing to climb, but its gains were likely to be capped around this prior swing high. So that unfolded as expected. And in today's session, the same thing stands with this formation of higher highs and higher lows. We will have to keep these 33,700 as the key level to watch out for in coming hours, and as long as the price action is unfolding above it, we will have to keep the bullish stance and keep looking for the buy on dips trade. Now we have to see if we have the Dow Jones as the best choice, or if there are better opportunities with better momentum emerging for us elsewhere. Now if we look at the price formation of the S&P 500, its move seems to be larger in magnitude compared to the Dow Jones Industrial Average. So we will have to adopt our strategy accordingly and keep looking for this momentum which is slightly better. So I think S&P 500 can be given the preference for any trade to be taken in continuation of the trend. And if we look at the NASDAQ gains are more than 2 percentage point from the low to the high. So the Nasdaq is the clear-cut winner of all three equity indices for the United States, and that has been the story for last couple of sessions also, as it has been more volatile and more bullish at the same time. So today's session, the same things are also applicable again, and here also we will have to continue to look for the buy trades, and for that we will have to keep this 11,200 as the key level to watch out for. And as long as things are holding well above this level, we will have to go for the buy trade, but only in next couple of hours. If we see the dip towards it, then it will be a better idea to go for it. After that, we will have to go for the fresh assessment depending on how things evolve. And as the US session is going to get underway, we will see higher volatility for next couple of minutes after the start of the session. So that is also going to give us a good idea of what to expect in the latter hours of US session. So that's my assessment at the moment, looking at this current price development. And before we wrap up, let's take a customary glance on the European equity indices. In today's session, the strength is not that much for the DAX. It has continued to gain with this bias remaining intact, but in light of the prior gains having been substantial, it has now gone on to rise, but in a subdued manner. Still, the gains are significant, but I think in today's session we have the US equity indices as the better placed option in relative terms. And let's take the FTSE also in account. The FTSE had also gone on to rise significantly, but now it has given up most of its gains, and it is actually trading closer to this immediate swing low. So this is the instrument with the weakest bullish momentum, and I think this can be the instrument to go short whenever you get further confirmation of the bias turning bearish. Not at the moment, it is not really advisable to short it at the moment, but apparently it is the weakest equity index of all the equity indices we have seen so far. So for any sell trade, this can be given the preference, and for any buy trade, the Nasdaq can be given the preference in the equity side. So that's my take looking at the current price formation in the equity market. So that's all from my side. If any of you have any query or any idea to share, do write to me the feedback, and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day, a profitable day ahead. See you next time around in tomorrow's session. Goodbye.